This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices edged higher on Monday as tighter supply reflected in fewer exports from Saudi Arabia and Russia, and high heating oil prices outweighed concerns about global demand growth amid high interest rates. Brent crude climbed 76 cents to $85.56 a barrel by 10:47 GMT, while U.S. West Texas Intermediate crude was at $82.01 a barrel, up 85 cents. The September WTI contract expires on Tuesday, and the more active October contract gained 78 cents to $81.44 a barrel.
China's liquefied natural, LNG, gas importers are starting up or expanding trading desks in London and Singapore to better manage their growing and diversified supply portfolios in an increasingly volatile global market. The beefed-up trading presence of Chinese importers puts them in direct competition with such global heavyweights as Shell, BP, Equinor and Total Energies for a market that the International Energy Agency says doubled in value to $450 billion last year. About a dozen Chinese companies have been expanding trading teams or adding new desks, with privately run ENN Natural Gas and state-run China National Offshore Oil Corp the latest to plan London offices, and utility China Gas Holdings setting up a Singapore operation, company officials and traders said.
Moving on to the top news in the energy sector.
Russia remained China's largest crude supplier in July, Chinese government data showed on Sunday, even as Russian shipments fall from all-time highs on narrower discounts and rising domestic demand crimps Russian exports. Arrivals from Russia were up 13% from the same month last year to 8.06 million metric tons in July, or 1.9 million barrels per day, BPD, according to data from the General Administration of Customs. For the first 7 months of the year, Russian arrivals were up 25% from a year earlier to 60.66 million tons.
Russia remained China's largest crude supplier in July, Chinese government data showed on Sunday, even as Russian shipments fall from all-time highs on narrower discounts and rising domestic demand crimps Russian exports. Arrivals from Russia were up 13% from the same month last year to 8.06 million metric tons in July, or 1.9 million barrels per day, BPD, according to data from the General Administration of Customs. For the first 7 months of the year, Russian arrivals were up 25% from a year earlier to 60.66 million tons.
Next, we have the top news in metal markets. Dalian and Singapore iron ore futures extended gains on Monday to their highest in 3 weeks on traders' relief that steel mills in China's major steelmaking province were yet to implement production cuts and on the latest monetary stimulus rollout by the government. The most traded January iron ore contract on China's Dalian Commodity Exchange, DCE, ended daytime trading 0.91% higher at 777 yuan. $106.35, a metric ton, the highest since July 26. The benchmark September iron ore on the Singapore exchange was up 0.56% at $107.45 a metric ton, as of 0717 GMT, the highest since July 31. Copper prices were supported by the lower dollar on Monday, but sentiment was negative due to disappointment with Chinese authorities' latest package of measures to boost growth in the world's top consumer of industrial metals. 3-month copper on the London Metal Exchange, LME, was up 0.1% at $8,247 per metric ton at 10:48 GMT after 3 consecutive weeks of losses on concerns about sluggish growth and demand in China and elsewhere. A declining U.S. currency makes dollar-priced commodities cheaper for holders of other currencies, which could help boost demand and prices of copper and other base metals. We will now look at the top news in the agricultural sector. China's soybean imports from the United States tumbled 63% in July from a year earlier, while shipments from Brazil, its top supplier, surged 32%, data showed on Sunday, spurred by a bumper crop and lower prices in the Latin American country. China, the world's top buyer of soybeans, imported 142,150 metric tons of the oilseed from the United States in July, down from 381,568 tons a year earlier. Data from the General Administration of Customs showed. However, the United States remained China's second-largest soybean supplier, accounting for 31.9% of China's total soybean imports in the first 7 months of the year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.